Sum number 9. Akhil, Sunil and Parvesh are partners sharing profits in the ratio of 3:2:1. Okay, so now there are three partners. They're sharing profits in the ratio of 3:2:1. The opening balance of loan by Sunil account was rupees 3 lakhs. So Sunil has given a loan to the firm for rupees 3 lakhs. So the firm is liable to pay interest on loan to Sunil. Interest payable was agreed at 10% per annum. Now see, the word given here is agreed. That means the partners have agreed that Sunil will be paid an interest at 10% per annum. So we'll use this 10% and not 6%. Interest was paid by check. So if it's paid by check, the interest amount will go to bank up to February. On 1st March, and the balance was yet to be paid. Okay, so interest was paid up to February. So up to February, whatever interest was there, it was paid. When was it paid? It was paid on 1st of March. Okay, and the balance, how much balance will be there? Balance will be left for 1 year. 1 year, I mean, sorry, not 1 year, 1 month. 1 month's interest will be, balance will be left. Okay, that was unpaid. Past journal entries for interest on loan by partner. Okay, now here we've got to pass the journal entries. Now before passing the journal entries, let's get clear with our interest on loan amounts. Okay, so first we can start the sum with working notes. Okay, interest on loan by Sunil. So how much loan did Sunil give? Sunil gave a loan of 3 lakhs, right? Out of this, how much interest was paid? I mean, 10% interest the firm agrees to give him back, and he was paid interest only for 11 months, right? See, the sum says that interest was paid for up to February. So only 11 months interest was paid to him. So we'll write 11 by 12. So that would make up to 27,500. This is the interest that has been paid to Sunil. Now we'll calculate the unpaid interest as well. Unpaid interest on loan by Sunil is again 3 lakhs is the loan he had given into 10%, that's 10 by 100 into only 1 month was interest was unpaid. So that would fall up to 2,500 rupees. This amount, this interest was unpaid. Okay, so now we got the interest which was paid, the interest which was unpaid. We are asked to pass journal entries. So let's first prepare the format. The journal entry format would be the pen is not working. Date, particulars, LF, debit, credit. We'll write over here journal entries. In the books of who are the partners? Akhil, Sunil and Parvesh. Date, particulars, then we have ledger folio, and then debit and credit. Okay, our first journal entry would be on 1st of March. Okay, because on 1st March the firm is paying the interest on loan to Sunil. How are they paying it? They're paying it in the form of check. So where will this amount of loan go? The interest on loan amount go? It will go to bank. Okay, this amount goes to bank. How much amount is going to bank? 27,500. This is the amount which the firm has paid, right? 27,500 is the amount which they have paid. Now, on what is the firm paying this amount of 20,500 into the bank? They are paying it as an interest on loan. To whom? To Sunil. So we'll mention that here. Interest on loan by Sunil. It means the partner Sunil has given a loan to the firm, for which the firm has paid an interest. And how have they paid it? They have paid it in the form of check, so it's going into the bank. Debit. How much amount has been paid? 27,500. A narration would be being interest on loan paid up to Feb. You can write up to Feb or for 11 months. Okay, that's our first entry is over. Now, again, we have an unpaid amount, okay, which would also go into our journal entries. Why are we putting it into our journal entries? Because this amount will also be provided by the firm. When would it be provided? On 31st of March. Okay, this is just an assumption that on 31st March the firm is giving. Okay, what is the firm going to give? Again, interest on loan by Sunil account, debit. How much is the amount? 2,500 amount the firm is giving on 31st of March. Okay, so 2,500. But has the firm given? No, it has not yet given this amount. So where will this amount go into? And this would go into loan by Sunil. Okay, because this is provided as a this interest is provided as a loan. I mean, for the sake of a loan that the firm has borrowed from Sunil. So we'll write as to loan by Sunil account, 2,500. Our narration would be being interest on loan for March provided. Okay, see, this is the interest on loan. Okay, this is the amount of 2,500 is the loan amount which is pending. It has to be given by way of interest on loan by Sunil. It has to be given by the firm, okay, in the form of interest on loan given by the Sunil to the firm. Okay, now since this amount is not yet gone into Sunil's bank, okay, it's not yet gone into the bank, so where is Sunil going to keep this amount? He's going to keep it as a loan by Sunil account. Okay, in a loan by Sunil account. The firm is keeping this amount in a loan by Sunil account. It means the firm knows that 2,500 has to be paid by them to Sunil. They've not yet paid it. They've kept it in spare. Okay, this is the unpaid amount which is kept in this account, loan by Sunil account. Now again, we've got to close the books on 31st March. So where will this interest on loan amount go? It will go to the profit and loss account. Profit and loss account, debit. To, can you see, interest on loan by Sunil, interest on loan by Sunil, both the amounts are debited. Okay, so now when both the amounts are debited here, now we'll credit it to interest on loan by Sunil account. 27,500 plus 2,500 would give us 30,000. This entire interest on loan by Sunil account will go into your profit and loss account. Every debit has a credit transaction also. So a narration would be being interest on loan by Sunil transferred to profit and loss account.